Hey, John, good to see you. Neelan, I'll take questions. We'll get started. I guess we're almost on the dot here. So I'll just give you guys a few seconds to get situated and then we can get cracking. So I have the TV on behind me. It's kind of just sort of listening to the interview with our Treasury Secretary, Janet Yellen, and I'm trying my hardest not to throw something at the TV. This is why, this is what I tell my son. You really have to learn to think for yourself. You have to be able to think critically, do your own homework, and not, rely on any, anybody else. So without getting into a political food fight, I think this has been one of the most, I can't think of, more economic policy malpractice that has been committed in the last 2 years. And so the first thing when Janet Yellen came on now, she said, well, the whole fault of everything is the Ukraine war. And then she blamed OPEC, and she blamed everybody but herself. She doesn't even realize that she's responsible for this whole mess. So that's a whole other thing. I can't stand this woman. So anyhow, I shouldn't say that. That's really, and I don't mean to be sexist. I can't stand her thinking. She's Treasury Secretary. She's trying to be woke and ESG and be, everything but in her lane. And she's, overseeing the most, really the most. So to me, it's very simple. Inflation just doesn't come out of nowhere. Inflation, as we've learned in our textbooks, is too little supply and too much demand. So, during COVID, everybody's at home. We had supply shocks, government sending out checks. And so you had all of this demand and very little supply. So what does this government do? They actually overstimulate. They send out more checks, do more helicopter money, more stimulus, inflate the demand even more, and then punish supply. More taxes, more regulations, punish the oil companies, whatever. And now we've got a desperate situation, and they've got no one to blame but themselves. And then you'll turn on the TV and it's Putin's fault or OPEC's fault or whatever. And yeah, those are terrible things, and they certainly carry a lot of risks. But this was, I was warning our members back September last year, July last year. There's probably a lot of people, on here, our members. And, I was saying inflation was here, that inflation was going to be much bigger than the government, thought. And then when it was here, they called it transitory. And here we are with a giant mess. So the question is, we're not trying to be economists here. That's not what our jobs are. We're not trying to be armchair Fed chairman and figure things out. We're just trying to, figure out how to make trades where there's good risk and reward. So I guess before I stand, if you weren't here yesterday, let me just, I'm kind of just lost my train of thought here. So let me start all over. Welcome to the second day of the 3-day trade execution webinar series. My name is Mark Shawson, the pattern trader. Yesterday, if you weren't here, I started talking about how I analyze all the markets, commodities, oil, stocks, from the perspective of looking at price, looking at risk and reward. So it's no use having some kind of macroeconomic theory. And, you could be right, in the next 3 months, but it doesn't really help if you get wiped out in the next 3 days. So the whole thing about trading is evaluating setups where you have smaller risk and a bigger outcome. And that's what I try and do at the end of the day. All this other stuff is just cocktail party conversation, and it has really no bearing on trading. And you really have to be objective. You have to not listen to all this stuff, not get all emotional and caught up in all this stuff. And unfortunately, I do. So this is what I've been doing. I advised our members this morning. I do a morning program called the Boiler Room, where 45 minutes before the U.S. session starts, we start looking at the setups for that day. So there actually is, people don't realize, there's a pre-market session and there's actually a post-market section. So you can see the market is actively trading. So even though the U.S. market stopped trading 36 minutes ago, there is still a very active aftermarket. And so I try and look at trades in the pre-market session. And if the market's going to open lower and I see something I want to buy, I try and buy it, cheaper. Conversely, if I want to short something and the market's going to open higher, I can sell into that. And so I've been saying that I am very, very bearish on the market. The market tells me that we are going to go down much lower, but this is a very dangerous area in the market. And today, after that morning session, it really bore out exactly what I was saying. I mean, the Dow was up 300, down, then it went down, then it went up, and we had, everywhere and nowhere. So this is really the NASDAQ. And, this is, what happened today. So, you kind of, come here, you get rated, goes that way, then it goes that way. And this is what the markets are now, really volatile. So there's a time to kind of put on your trades, even though I'm very bearish and the market was really coming down this morning. I just felt like, man, I wanted to join that, and I said, look, this is just not a good idea. And then you had this huge flush, this huge short covering rally. And this is what happens. So it's all about the discipline. It's all about waiting for the correct time and place to do things. And the market actually tells you when to do that. So I've been long this stock, Schlumberger. I'll tell you why in a moment. I'm in the stock. I start buying the stock around $36. And, here is the so I start buying, and then I start buying call options. I bought the $43 calls for the 14th, which ends this week. Then I bought some for the end of the month, and then I've also got some $44 that also gives me till the end of the month for this thing to go. And on the FX side, I'm just short the New Zealand dollar versus Canadian. I'm long some pound versus Canadian. So today there was an intervention again by the Bank of England. They gave these pensioners 3-day pay or quit to get out of their positions. And it just added a lot of turmoil into the markets. And the pound got hammered. The pound New Zealand got hammered. I may just get out of this position and reevaluate. And I'm kind of short some Australian dollar positions. So all in all, I've been short this New Zealand dollar Canadian position for a while. And you can see some positions are winning, some are losing, but overall, I'm still in the pink. And that's really the idea. You want your winners to be much bigger than your losers. And so I try and stay in trades that, look like they're still going to stick around. So, this was this New Zealand dollar Canadian trade. I sent it out to our members about a month ago. So, I'll stay in a trade for as long as it will have me. So let me kind of share with you why I'm in this Schlumberger trade. Let me see where this slide was. So ironically, right when I started the pattern trader in around September 2015, there was a pattern in the NASDAQ that looked just like the pattern that I'm looking at right now in Facebook, and which could be the same pattern that we're seeing in Schlumberger. So that really is, when I thought about starting the pattern trader, most people focus on the trades. Do the trades work? Did that trade work? So this is not a signal service. This is not a managed account service. What I'm trying to do is educate people on how to look at the financial markets based on price. And my whole thesis was to create, if you joined as a member, create a living archive where you see these charts, you see these setups. And regardless of whether they win or lose, the idea is to learn from, how these things, if you lose, why did that not work out? And if you win, why did that work out? And so to me, that is really the value of this. If you're looking at this as like a signal service, if I get knocked over by a bus tomorrow and you don't learn anything, then it's really, not really of any value. So that's really what I try and do here. This isn't about the trades. It's about evaluating the trades and developing a way of thinking critically. So I saw this very same setup in the NASDAQ about 3-4 years before I saw this setup. I observed how that played out, and it really stuck in my mind. I mean, I see thousands of trades all the time, but for some reason, I'll never forget the sequence of that trade in the NASDAQ. And then in 2018, I saw the very same sequence. And the sequence, what I'm talking about, is that you can see in this chart, and again, this was Facebook in 2018, 4 years ago, where you made a new high and you formed this kind of reverse triangle formation. And you can see that, Facebook at the time fell out of the sky at 195 and then dropped to $150. And right around that time, Mark Zuckerberg, the CEO, was called to Congress, and he was, asked a whole bunch of questions on how they were corrupting the minds of people. And it looked like Facebook was, just a write-off. But, you can see that it formed this little bottom here and then went on to make all-time new highs. And once you understand these sequences, you can use these as a resource. This is, what I try and do is understand price. And if you can understand price, you can make yourself a boatload of money. So when I saw that sequence, this is kind of an upfront view of it, where I saw this double bottom and I saw this, what I call a key reversal, where you can see right here on this day, made a new low and then closed right at the high of the day. So I bought the stock there. I bought like, 10,000 shares or something. And then it went up about 10 or 15 bucks and I made over $100,000 on that move. I got out, the thing dumped, and then it made another key reversal. Now, with this double bottom in the rearview mirror and this key reversal, I said, there's a good chance that there's going to be a pretty powerful move here. So what I did was I bought far out of the money call options. A call option is a very leveraged bet on, betting on something going higher. So at the time, Facebook was trading at $160. So I bought these call options way out of the money, $185. This meant that the stock would have to go $25 for me to make any money. And, crazy bet at the time, but I thought at that time, based on that sequence, this thing was going to go make a new high. So I started buying the 185 calls at 30 cents. That's $30. So every call option is 100 shares. So 30 cents times 100, it was $30, $30. And I started buying hundreds of these things. I actually bought about 1,500 of these things. Then I got real excited. I bought the 182.5s. Then I bought the 180s. And you can see that right here, this thing went into the money. So it went from 160, and at this point, it started trading at 187, 188. And I bought these 185 calls at 30 cents, and they went to $4.50. So I made 1,500 times my money, 15 times 30. And, same on the 180s and the 182.5s. And I made a whole bunch of money on these trades, hundreds of thousands of dollars on these trades. So this is the value of understanding price. Now, this is why I started getting excited and buying the stock and the call options in Schlumberger because it kind of has the same sequence as Facebook did, as did the NASDAQ 3 years prior to that. So the sequence I'm talking about, as you can see here, is the reverse triangle. You know, this thing dumped from $50, went straight down to 30. Looked like, you know, it was going to fall off the planet. All of a sudden did this little double bottom here, which looks just like a W pattern. And then in fits and starts, you know, this is exactly what, you know, I saw with Facebook, where it went higher. I bought the stock, kind of settled out, dumped, and then I started buying the options on the bet that we were going to have a very powerful move. And so far, so good. I'm up about 300% on my options, and I've still got a couple of weeks for this thing to go higher. So, and you can see we had a mini reversal today. Went lower, kind of closed higher. I don't know if I would call that a huge key reversal, but you can see we opened at the low and then, you know, went higher and closed higher. So I'm hoping we kind of dig in here and start, you know, laying the groundwork for a move in the next week or so. I've still got till the 28th. So, and then I've also got some, you know, in November. So I've got a few weeks for this thing to kind of still go vertical. And I probably should have gone a little further out. So that's the problem with options. You're in a race against time. You know, I think this will go higher. The question is, will it go higher in the time frame that I need it? But independent of whatever I'm doing, this is the sequence where I saw this bottom and theorized that that was the bottom. So if something has formed a bottom over time, it's going to go higher. Where, how far, what time, these are unknowable. But once we know the bottom is in, you know, I know that every time it sells off, I can buy it. That's the nature of a market that, you know, has bottomed. So again, it doesn't matter if this is the euro yen or corn or gold. I simply evaluate this transaction based on certain risk reward parameters. So right here, you can see that we were forming this rounding bottom, you know, and I made a risk reward calculus that if I bought this at $36, which I sent out an email to our members to do that, you know, my risk was really the low of that day or the low of this day. And so I really had a $2 risk to make a whole lot more. And that's what it's all about. Risk and reward. So, you know, I made a calculation. It was worth risking $2 in order to make 5 or 10 or 20. And that's the whole deal in trading. If you can make, you know, 3 times your risk, that's how you make money in trading. You can bet 2 to make 6. You can actually lose 72% of your bets because you're going to win 3 to 1 on your trades. Now, this is very different than what most people are doing. Most people are trading for much lower outcomes. If you bet, you know, 15 pips in the market and you got to risk 15 pips, your outcome is 1 to 1. Then you also have to pay the spread. No, nobody takes that into account. If you do 7 trades a day times 3 pips, now, you know, you got to overcome 21 pips and your average take profit is 15. That's why most people, it's a war of attrition and they just keep losing ground and don't understand why. And that's why most people are losing their money because their risk reward is simply the outcome is not big enough. So what I try and do is look for trades where you're going to be able to take a piece out of the middle of something like this. And if you can do that consistently, that's how you make money in the market. If you're in and out 5 times a day trying to pick apart, you know, $1 move or $3 moves or whatever you're trying to do, you're not going to be able to do that consistently. Lisa, how do you spot these patterns? Well, I've been doing this so long, I'm embarrassed. I can see these patterns in my sleep. I can see what these things are going to do before they do it. Sometimes, I hypothesize that once a market bottoms, and it dumps off here, I start looking for these patterns. Now, what I look for is a combination of, if the price stops in a certain area, and then what does price do once it gets there? So this is very subtle, but you can see that prices collapse, and it made an all-time low for this move, but by the end of the day, it closed right on the high of the day. So sometimes I will say, okay, man, I think this is in the neighborhood of something, and I will take a shot at getting in there and risking that much. So it's all about trade-offs. It's all about saying, am I willing to risk this for that? So I can spot these patterns in my sleep. And that's what I try and bring to the table at the Pattern Trader. And that's why, you should sign up, because I'm pretty good at what I do. And I don't mean to sound arrogant, but the challenge also is that the market will throw you all kinds of patterns, right? So here's a double bottom, and then here's a double top. And you'll say, well, okay, isn't this a double top? Yeah, it is. But again, you kind of have to look at the cadence and understand that if a market has bottomed, how can it then top? Can't just bottom and then top. So the market throws all kinds of stuff at you, and you kind of have to know what you're doing. So, again, I can look at patterns on anything. And what I try and do is detect what is the governing pattern, because the market throws you all kinds of misdirects. It's always going to throw you off the scent. I always say the market's like a magician, where a magician doesn't just come out on stage and pull a rabbit out of the hat. He's doing all kinds of misdirects, showing you what he's doing with his right hand while he pulls a rabbit out with, his left hand. And that's effectively what the market does. So you have to understand what is the operating trend. If a market is in a trend, then that's pretty easy. We can pretty much see that if a market just keeps on making new highs, that you just want to get in cadence with that. Where I really make a lot of money is on the turn, where trends change. And before they change, they always put on a pattern. Right? So, up here, you kind of had this little head and shoulders. Looks like a man or woman's head and shoulders. And that is a reversal pattern. So it just throws into reverse, well, whatever was happening there. And then you had this huge move lower. And then it gave way to another pattern, that now is going the other way. But here's the thing. This is a daily chart. And for the main part, you can, look at these things. But whenever I'm confused, because, if we look at this now, really, it's somewhat arbitrary. It's kind of, it's up, it's down, it's kind of in between, right? So it made a new low here, made a new high here. And, how do we figure this out? So whenever things look a little bit ambiguous, what I do is I start backing away and start looking at a higher time frame. What's going on the monthly or the weekly? And so, this is the difference of looking at things on a 15-minute chart where you can see the last 6 days. Now I'm looking at the last 10 years, and I can start making certain, so on the monthly, here we have this double bottom. And if a market has made a bottom, then on balance, it's going to go higher. Now, sometimes, again, things make a bottom, then they put another thing and go the other way. So since that time, we've been kind of operating on higher lows. So that's the definition of an uptrend. Definition of uptrend is higher lows and higher highs. So this is still an uptrend. And the way trends end is they end the same way they begin, with the pattern. So if this comes up here, bangs up to 50, forms a double top, then starts going through here, then this whole thing could get thrown in reverse, and that's how markets work. But for right now, we're still in this stealth uptrend, and it still feels like we need to go back and retest these lows, highs, or go higher. So you can see we're just kind of in the middle here. The market's not going to just end here. So it almost has to go higher even to go lower, if it's going to go lower in the future. So that's what I'm banking on this next push into new highs. But you can see that this is, a very different visual than we saw on the daily. And then, I can back up and look at the weekly, and then you can see this double bottom looks even more pronounced. So I just look for patterns. And this is what I call a governing pattern, because this double bottom governs and dictates what this thing is going to do days, weeks, months, maybe years into the future. So this is my trading for dummies. This is my cheat sheet. Now, again, things don't go straight up, but we know that, a pullback is an opportunity. If this is an up market, then pullbacks are opportunities. And so when this thing crashed, I bought it. Now, if you're looking at a 15-minute chart, this looks like a huge crash and you're going, I need to be short, or now you get caught here and you wonder why it's up your bum there. So I just, try and, the first thing I try and do when I look at a chart is I open up a chart and it should immediately just speak to me. It should either I see a trade or I just move on. So, I ask myself, the first thing I ask myself, well, what is this market doing? Is it an uptrend or downtrend? And, since last April, it's gone from $10 to $40. It's up 400%. So I think we can all agree it's in an uptrend. Then I look for, the chart patterns that are guiding it. So you're in this kind of a broadening triangle, which can be a continuation or reversal. And I'm surmising that it still needs to go and bang the upside of this kind of reverse triangle here. And then more recently, you had a bottom here. So, within the cadence of this market, then I look for patterns and then price action. So once I determine, okay, this is an uptrend, then I look for my pattern, and then I look for what I call my insurance day bar. Now, I'll put a link to my book that explains this 4-step trading methodology in a moment. But this is what I call a key reversal, where you can see this made a new low and then close at the high. Now, it looks like nothing, but to me, it did that in cadence with an uptrend, with a double bottom, and is pointing in the direction that this market wants to go. And then, in order to confirm it, you basically want to put, buy stop above here and let the market confirm what you're looking at. And this is what I do on every trade I do. I just try and look for high value trades, small risk for large rewards. and I hunt around all day. I don't care if I find it in gold or oil or Schlumberger or Dash or whatever it is. I don't really care. I'm just looking to hop a ride on a bus that, can make me more money than I'm risking. Nealon says, how prominent does the reversal bar for you to pay attention? It just, first off, this is a weekly chart. I think it's Nealon. So whenever you see these weekly reversals, you can see made a new low, close on the high, you had an inside weak bar here, and then you had a huge push. So I just simply look and see, where does the market close? So, every bar, whether you're looking at a 1 hour chart or a daily chart or a monthly chart, has a high, low, and close. And I simply look to see, where does this close? And if it closes in, the upper quadrant of the bar, then you can say, well, the buyers ended up in control. Now, I don't just look at this reversal in a vacuum. I'm looking at in the trend, in the cadence of things. And so this is just, the third step in a process. So here's the pattern, and then here's the reversal. So it's just, again, you can buy it here and put your risk there. Whether you're right or wrong, you've got that much risk for that much upside. And that's what I look for. It's simply an exchange of risk and reward. What Yellen says, what Powell says, we've got PPI tomorrow, we've got Fed minutes, we've got CPI on Thursday. You've got all kinds of stuff coming out. But it's all noise. It's all about price and risk and reward. And so even though I've been very, very bearish on the stock market, and I still think the S&P is going to go down to about 3,000, this is a tough area in here to get short. So maybe, it's not, so you can see when the market kind of hits certain areas, it doesn't give ground very lightly. You kind of get here, and now you're treading water here, but now you've got all these information things coming out this week, and you could have one of these blasts before it goes down. So I like to look at markets in terms of energy. So you can see that we've kind of come down pretty far from 4,400 to 3,500. And so, if you make a calculation, I want to get short, the world's coming to an end, and it is. And I think we are going to 3,000. But again, it's, where do you get in here? Getting in short here, right at the bottom, and, it could be, these rallies are enormous. If you get caught out in the wrong place, if you get caught out right at these lows, you will pay for it dearly. So everything's about a risk reward. And even though I'm so bearish and the markets came off so hard today, I was telling our members, I just don't think that I want to be short down here. I want to wait for some kind of relief rally, get it up there. So I always think of it in terms of like the elastic band, where you pull back the energy. So now you pull back, now you're loaded, now the energy can go. Right here, the energy's been kind of dissipated, and you're going to get caught in here. And then if the energy comes up here, you're going to be in a world of hurt. So I would rather wait for this thing to bounce and then short it. Now, it may not come. That's the discipline of trading. We watch this thing and it's crashing, and I want to get short so badly. But, there's a time and place for everything. So I see that there's some guy Lado. So you guys should be aware that, sometimes I get trolls, people who are trying to steal my traffic. I'll talk about that tomorrow. That's why I'd love if you put a review, because I'll talk about that tomorrow. But Nealon says IGV broke through. So this is the S&P. It's in the middle of this, kind of downward trending megaphone, if you will. It's right in the middle. So, it could oscillate, above or below, but that's what I believe is going to happen, that we're coming back to 3,000 or possibly even lower on S&P. But again, we may have a 3-month rally before we go again, or not. This thing could just fall out of the sky. We've got all kinds of news this week, and all you need is a catalyst and a push, and this thing is in such a bear market, it will just fall over. So it's just a very different calculus. I mean, I'm watching the aftermarket right now, and so that's the thing. Market crashed on this Bank of England kind of thing where they're squeezing these pensioners, giving them 3 days to get out of their position. And so, you had a run up earlier. You first had a rundown. Then you went higher. Then you crashed on this Bank of England thing. And now this is what's happening in the, ever since I started talking, this thing's been going higher. So it's just it's all about risk and reward. So you have to catch these things right, or you're going to get hurt. And this is at a very difficult area on the S&P. You can see there's all kinds of junk here. And this could very easily, turn into a bottom down here. I don't think so, but, you're just in this vicinity where 3,600 on the S&P is, an area where you could just very easily turn into a bottom before this thing craps out again. So this is kind of the channel that we've been in. So this thing still looks like it needs to go lower. Well, we'll see. I've been very bearish on gold for a long time. Despite the fact that we had the worst inflation in 40 years, and a war that threatens to be World War III and annihilate all of us. You can see that gold basically tapped out 4 years ago. So it was supposed to be this great inflation hedge, this hedge against chaos. The same with cryptos. And you can see that, it's gone from 2,100 down to 1,600 in the time of the worst inflation, central bank printing, and all that stuff. So if you're looking at the headlines and, trading the way most people think markets go, then, why this thing is cutting out all the time here. But gold has been trading within the cadence of this ascending broadening triangle. This is what we talked about in the S&P, where throughout the pattern you go higher, you start out narrow, and then you widen or broaden out at the top. Now these are typically reversal price patterns. So that's the thing. Once you understand what the gig is, notwithstanding the fact that gold throws these huge rallies, these are just rallies in a bear market. Now, these things also tell us where, once they break, so we had a breakout of this thing. Sorry, I don't know why this is, but I need the light. So broke out, retest, hit it on the dime. This is exactly what the S&P did. And then when you make a new low, this then tells you that this trade is real. Sorry, this is really distracting me, but this light helps me. I feel like I'm sitting here in the dark. I don't know what's going on with this thing. So the interesting thing about a ascending broadening is that it typically returns right back to where it began. So you could put a take profit at 1,200, and 18 months from now, you probably get hit. So, this market is telling you to get short and stay short. So this is what I look at. But, here's the thing, I look at what patterns are. This thing is crap. Well, I just feel like this is really dark here. So what I do is I look at patterns. I draw my boundaries around prices. And then I develop a thesis on what should happen. But if prices start to do something different, then, I will, obviously respond to the market. What I think is, has no bearing. So, it's a very dynamic process. These markets move through different cadences, they form different patterns, and I make risk reward determinations out of this. So that's basically it. I looked at New Zealand Dollar Canadian yesterday. I showed you that it's broken out of a 8-year downtrend. And even though we had, a bit of a flurry to the upside in the last day or so, I don't really worry about it. This thing is now picked a trend, and I'm just going to, stay out of the way and let it happen. So to me, it's, pattern equals trajectory. So this thing is put on a huge kind of head and shoulders over 8 years. And we draw a line through the pattern. It's called the neckline. And once it busts through the neckline, that's the green light. So typically you can do some kind of measurement from the neckline to the top here. So from 80 to 96 or 98, that's 18. So let's say we just do 60% of that, and you can shave 12 off here. This takes us down to 68, basically where this is. So I still think we have 700 pips to go. So, today we had all kinds of, up and down and sideways. And I don't even think about it. I keep my stop way out of the way and let this thing just swing. Neelan says for trailing stop. So for a position like this, Neelan, I hate to advertise these things, but sometimes I don't even put a stop loss. I mean, when I'm very comfortable in something, and look, in today's world, you could get Fed, intervention, you could get central bank intervention, you could get 500 pip moves. So you probably, but I've got a 79.25 stop loss, so 225 points away on this position to protect some of my profits here. But this is on its way, and to put a 50-point stop loss or 100 points, you're just going to get banged out in the noise. So I keep my stops very wide. You can see that from here to here we had a huge move. And, I wasn't even watching it. So we went from 76.60 to 78.90, 230 points. So what kind of stop do you put on that? 70 points, 80, 110, whatever you did, you would have been stopped out. So my whole thing is, what is this chart telling me and this is in a profound downtrend. So you're going to have all kinds of rallies. I mean, I guess yesterday you went to the low of 76.20, and then tonight you went to 77.50. So you had 130 pip little, overnight move here, and now you're back really in the middle. So, most people put a 30 or 50 or 80 or whatever. This went up 130 pips. So what? It's just doing nothing. You have to kind of look at it in the cadence of the whole thing. If you're looking at a 5-minute chart, 130 pips is a monster move. I'm looking at this in terms of, a 3-week, 3-month, 6-month, 9-month trade. I'm just going to go up and down and swing all over the place. And I don't really care. This thing is going down. So that's basically what I do. In a moment, I'll share my book. It will share with you again. There's a 4-step process that I look at when I'm trying to evaluate an opportunity. So, the first thing is, what is a market doing? Now, this one was a little bit strange. Began with an up move, and then moves always end with the pattern. So before a market turns from up to down, there's always a pattern. And so this revealed that this topped out in July of 2017, 5 years ago, this thing topped out. And, since that time, we have been going lower. So this one is a particularly difficult one. But again, what I do is I, say to myself, what is this thing doing? Well, this was an uptrend. Then it made this profound bear pattern, which then now suggests that it's going to go into a downtrend. And then once I kind of understand that, then I look for what I call my insurance bars, a key reversal, where you make a new high and you close on the low. So that right at the neckline was when I, told our members, this is where you should short this thing, right there. I'm looking at a weekly, this is on the daily, but that was right at the 80-25 level, right there. So I didn't just pick that out of the air. The market told me that that's where the gun was going to be fired. And now I'm into a 300-400 pip trade. So Phil says, if we use CFDs, the interest charge. So yes, so there are in FX, there are swap fees, right? So here you can see that I'm paying all of these swap fees. I paid $3,500 in this, $3,400 on this, so about $8-9 grand in fees. But I made, $150,000, $190,000 on these positions. So it's just like a restaurant or anything else. It's a cost of doing business. But here's the thing. I've been in this trade since August 22nd. So a month and a half. I did one trade and I paid $3,500. Now I've got a pretty sizable position on these are 30 contracts right here. So if you add it up, paying whatever the spread is in the New Zealand dollar, Canadian dollar, it's probably about 5 pips. If you, trade it in and out, I'm looking at this, it's 3.5 pips on my broker. So if you pay 3.5 pips and you're trading in and out 3 times a day for 6 weeks, you're going to end up paying much more than that swap fee. So yes, there is a cost of maintaining these positions, but that is offset by, the profit of staying in them. So yes, you do keep accumulating. These costs build every 2 days. I keep paying more, but the profits keep outdistancing them. So there's a, like trading, there's a cost of doing, everything, but nobody really adds up the cost of a 3-pip spread. If you're in and out 3 times a day, you're paying 9 pips. I had 30 lots on, so I'd be paying 270 pips a day in commission, in spread fees. And just because you don't see it as a disclosed cost, believe me, it adds up. So 270 times 6 weeks is way more than the 3,500 that I've paid now. So that is the determination you need to make when you get in these trades. Does it have, enough potential to justify the cost? So with that, I'm going to introduce you to my book. This will explain it maybe better than I can. And the good thing is this is a pay what you want. So $10, $20, $100, whatever you want to pay. I put the link in the chat box. The proceeds go to the American Childhood Cancer Organization. So all of my royalties from all of my books, I don't get a dime personally. I take it all. Sometimes I double it and I send it to this charitable organization, the American Childhood Cancer Organization. I've given $35,000 in the last few months. So, A, you give to a worthy cause, and B, hopefully you'll, get some value out of this book. So I put that in the chat box. And so that will explain the 4-step thing. What is the phase of the condition? What is this thing doing? Is it up or down? Is there a chart pattern that is telling me what's going on here? So when we see all this nonsense, you got to bury in here and see, okay, this is the governing pattern. So since 2017, in fits and starts, this pattern has been governing and dictating the price action in New Zealand dollar Canadian. This told you these 2 key reversals right here and this double top said this market has topped. And by and large, from 98, we have gone lower, and now we're 2,000 pips lower. So I look at everything in the same way. Schlumberger, New Zealand dollar Canadian, gold, those are 3 very uncorrelated trading instruments. It doesn't matter. I evaluate everything based on the price action, the price patterns, and the risk reward opportunities inherent in whatever I'm looking at. So does that make sense to you guys? Do you think that, this kind of approach over time could help you? Do you see it as a way you could make money, or do you think it's just Chinese and a lot of bollocks? I'd just be interested in hearing your feedback, because sometimes I just drone on. I know what I'm a very visual person. I know what I'm looking for. And, I understand if you don't have a strong background in technical analysis, it could all seem pretty overwhelming, but it's really not. Neelan says, definitely, I've been following your trades and making money. John Weaver says, 100%, Mark, it takes time. So thanks, John. So, there is kind of no magic bullet, but, to me, if you know where to enter a trade and how to ascertain your risk, that to me is the holy grail. Where something is going to go, how long it's going to take to get there. These are the unknowable parts. I think Schlumberger will make a new high. Will it do it this week, next week, 3 months from now? Those, that's, I can't know that or control that. All I can control is my entry and my risk. And that's what it's all about. Now, as Schlumberger goes higher and higher, the risk reward calculations change, and that doesn't mean you just hop in anywhere. So it's always about, that's why I can never make, where do I put my stop loss? Where do I put my take profit? The answer is it depends. It depends where I get in the trade, where the trade is in the maturity. And I like to get a trade right as the horse is about to, jump out of the barn. So when I saw Schlumberger coiling here, to me, this is where I can make a very easy risk reward calculation. So, right here, I said, okay, it's bottomed. And so I'm presuming that you have a bottom here. So this thing had a rounding bottom, and I said, okay, I'm going to get it right as it's breaking out of this little coil. Now it's way up here. So now, it's a whole different deal than getting in down here. I'm up 300% on my options, getting in there. And now, getting in here, it's a different deal. Although I still think that in fits and starts, this is going to find a way to go higher. You can see that this is tracking pretty much the way this Facebook trade went. And it's just amazing how you can have some non-correlated trade, two different companies. So you can see this is the area we're in right now, relatively, if I overlay these two charts. So you can see we sprung up, and then now this is where we are. And this is what Schlumberger could do. So 1, 2, 3, 4, 5, 6, 7 days. It just banged around here before it went and made a new high. So that's what I'm hoping, that this week it just bangs around. So we've got what? We've got 1, 2, 3, 4. So we might have, 3 more sessions where we just bang around in here. Pretty interesting. So, we could, go through here before we go up again. And that's, kind of what I'm looking at. But pretty amazing, huh? How it's really tracking very much the same. So this is why I love trading. It's not really even the money. It's kind of finding those little pearls and seeing if you're on, get it right. Okay, guys, that's basically, my gig for today. And tomorrow, we've got another loaded day. You've got Fed at 2 o'clock on Eastern time saying something about interest rates. You've got producer price index before the market even opens in the morning. And, all this potential volatility. So I'm just kind of looking at how we closed. So it still looks like that this thing is just going to dribble lower. That all of these rallies look like they should be sold, but it's just at a very difficult area here. I like looking at charts, all kinds of. So the charts I just looked at are the session, the regular session. This is the futures or the spot where it trades all the time. So I get to see the pre-opening and what have you. So you can see this is just this area that we're in here. This is why it's so tricky. It went down here today, bounced right here and bounced. But because we really didn't close on the high, it still feels like, we're going to try and take these levels out. So it's just a very, very tricky area in here. And that's why you see the kind of volatility you had today. I think you had 3 moves of 300 points in the Dow today. So the market's all about, getting in at the right place, and getting short here, very, very tricky. I mean, even if you're right. So what I like to do is get a pullback of the elastic band and then go. Wait for another pullback and then go. So it's going to be interesting to see what happens here. by kind of just closing in the middle, just still suggests that, you know, this thing can only go lower. So this is what I do. I look at price action. I understand price action. And if I can share that with you guys, that's what I do here. As this is like a replay, you can just message our team support at thepatterntrader.com. So, all right. I will see you tomorrow at 4:30 Eastern Standard Time. Check out the book. I hope you got some value. If you've got any questions tomorrow, I'll answer them. And we'll kind of see what tomorrow brings. Thanks, everybody. Thanks, Dwight.
All right, Mark. See you tomorrow.